Hello, everybody. This is Maj Soueidan here today with another Investor Insight Skull Session episode. Today, we're this really exciting one here. We're here with Lee Roach. I came across his, a lot of his what he talks about on Twitter and through his Substack, The Value Road. You can follow him on Twitter at Lee Value Roach, and I suggest you follow him on both avenues there. And I'm also joined here today with Diego Latorre. He is our newest intern here. I think this will be his first investor insight skull session he's on with us, and should be a fun time. He's a smart kid, and look forward to having a good conversation with all three of us. Before we do this, let's get into the terms and conditions, and then we'll start talking to Lee.
This discussion is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. This is not a recommendation to trade, buy, or sell any companies discussed. We recommend you consult with a professional investment advisor before transacting in any securities mentioned in this discussion. By viewing or listening to this event, you agree to the terms and conditions, which you can view in full at msmicrocaps.com.
All right, so let's do this. Let's move on to the actual discussion here today. I wanted to start this with a quote from the Idea Brunch Substack, which I was recently interviewed on, but more importantly, Lee was, and a lot of great investors and undiscovered investors are on there. So I suggest you kind of look at that one. That's by Edwin Dorsey, and there's a passage here I'm going to read to you, and then we'll let Lee expand upon it. But I like the way he brought. I like his story. It's really, I think it relates to a lot of us and everyday investors, how things can kind of transpire without having a foothold or a experience in the financial markets, but just finding it. So, of course, I grew up in a small town called North Branch, went to high school, and then got a job at a manufacturing plant one town over. I always enjoyed reading about history. I would read about almost anything from just about any time frame. As time went on, I inevitably started reading pretty extensively about economics throughout various stages of world history. Feudalism, monarchism, mercantilism, free market capitalization, and the like. After reading through enough of the kind of material, I began to wonder if I could learn how to successfully make money in the market while mitigating my risks as much as possible, because I frankly do not have much money to lose. That's when I stumbled upon The Intelligent Investor in an old thrift store I was rummaging through with my girlfriend and a buddy of mine. So I really wanted to set that up because it's pretty awesome, man. I think it's such your journey really well, and just I think a lot of us investors, myself, my thing was stumbling upon Peter Lynch's book, Went Up on Wall Street. My dad gave it to
Oh,
me.
yep.
Watching my dad, I think a lot of this resonates with a lot of people who just come across it and it connected with you for some reason. It doesn't connect with everybody, so let's get into it. So just tell us about the beginnings. Maybe your life before investing, into investing, and how you found these small companies kind of to invest in, and what brought you to the Substack eventually.
Yeah. So I actually got interested and initially pulled the trigger on investing because I was interested in history. But I was 17, 18 years old, like in 2008. So right as that Great Recession happened, there was some people around me that I saw make a lot of money, and there was a lot of news stories about people that essentially capitalized on that situation to make an excessive amount of cash. And I obviously had absolutely no money to invest at the time, but I always knew, like, when I did have something to put towards an investment, that I would actually want to get into the market. And as I got older and the job that I was working and still currently am working wasn't paying what I wanted it to pay, I kind of thought that I eventually just had to start making money some other way. And I didn't want to put all that into, one business that could potentially fail. So I slowly started investing.
And what about beyond that? Was there any kind of family members that ever invested, or any friends that kind of got you to kind of work, or was it all like a self discovery process kind of thing?
Yeah, I had one friend who had done some investing and had kind of always urged me to invest a little bit. He basically walked me through, like, what my tax rates were going to be and what I could expect from things like that. And yeah, he kind of started me up.
And when when you read The Intelligent Investor, do you remember what kind of was there anything that stuck out? I mean, you've read other books here too, I guess. Was there a resonating theme that kind of stuck with you at all when you're reading these books at all? That kind of like, wow, I want to do this, or anything that kind of got you excited?
Yeah, so when I first got into investing and what I wanted to do, uh, the first thing that I realized was that technical analysis and being just a math genius was probably not going to be my bag. And a lot of people had talked about value investing and had talked specifically about reading The Intelligent Investor, including a friend of mine. So I decided to read that book. And the first time I read it, I actually had no idea what that book was talking about in relationship to actual stock investing, because most of it's about bonds and things like that Benjamin Graham invested in. But as I started reading more and more books, and I actually getting resources like just articles on the internet, like Bill Ackman would have like how to value a company, like walk through videos, things like that. I started getting more comfortable with evaluating companies, and that eventually led me to being able to read security analysis like and fully understand it. And yeah, I was kind of stuck on value investing, especially in industrial companies. I work in industrial manufacturing, and I don't understand high technology businesses. I'm not like an expert on anything that's in the medical field. You're like never going to see me write up anything that's a biopharma company or anything like that. So all of that stuff kind of like resonated with me as something that I could potentially understand.
Right. I guess you say here you had some early losses. So when you came into investing, number one, did you jump right into the nano cap area, or was there a kind of experimentation, the big cap, space? And number two, I guess you said you had some losses there. So was your first experience not good when you came into it?
No, not. It was pretty bad. While I was actually like reading books like The Intelligent Investor and Security Analysis, and I think it was common stocks and uncommon profits, things like that. I had just started investing. Um and as I had just started investing, I was just dumping my money into like technologies that I thought would really be like the future of like medical marijuana was just getting legalized around that time period, and I thought that was just going to like shoot through the roof, and it was like impossible that those kind of ventures could be not be profitable. I was really into like green energy and things like that because you're just hearing how exponentially fast all these companies were growing. And yeah, I lost a lot of money in most all of those things. I made a lot of money in oil during that time frame, and that was one of the other reasons why I started kind of getting pushed into value investing. It was
Hmm.
just like little industrial companies. They were kind of easy to understand. I could understand that a company could pull oil out of the ground, sell it for X amount, a barrel, and produce this much cash in a year. It was kind of hard to. I mean, you're literally just guessing what the future revenues of like a solar panel company are going to be when it's losing money every year and still needs investments and doesn't have a customer base yet, things like that. So
Hmm. Excellent. Yeah, I think you said you began writing and Seeking Alpha in 23. So if I see here you launched the Value Road Substack. You found some nice opportunities here. Let's I'm going to actually share this particular screen from the presentation that we put together. So yeah, so your journey. Let's go back. So your journey began in what year actually now, Lee? So it was basically
I started investing like 2019,
okay.
maybe early 2020. And then yeah, I tried writing for Seeking Alpha in like early 2023 as I was starting to finally like get the hang of investing and starting to see like good returns and starting to like form what I thought was like a solid thesis. I uh I was basically encouraged to write for Seeking Alpha, just to like better flesh out my thoughts. It was really hard to organize everything and how important one aspect of a company's valuation is in comparison to another. Does enterprise value have more of a precedence over net asset value, over like what a company's potential discounted cash flows could be, things like that.
Did you find that helped you a lot then doing that? Was that a process you're lucky, you're glad you did, and the whole writing part and journaling things?
Yeah, absolutely. Mostly just because you get yelled at. If
Right.
if you have a bad valuation, people like will let you know. Sometimes those comments are like valid, and I'm most of the time in my case they were. Sometimes not so much, but yeah, when that happens, like your over idealized perceptions of like what investing is kind of like fall apart too.
Hmm.
In some areas, and you just it does make you a better investor, and it makes
Yeah,
you think about all those things the next time that you go value a company.
yeah. I know for me, man, it's like if I go back, I used to write a newsletter years ago when it went before the internet and stuff, and I would send it do a mailer. And I go back and read some of those, like like from 30, 20, 30 years ago. Like, did I really write that? you know,
Yeah,
you know, one of the things I see these days on the valuation side is that I'll see a lot of young investors come in and they'll write articles and they won't adjust their earnings for like one-time items or one-time events, and they use these PE ratios that are based on non-recurring numbers on the earnings line.
right,
That's one of the things I see happen. But I used to do that myself, and then this is all that non-GAAP versus the GAAP stuff, right? Adjusted earnings versus non-adjusted. What should you use? And
right.
that's one of the more challenging things sometimes I think. Okay, so I guess the Substack came along when then? What year?
uh the Substack came around November of last year of 2024.
Hmm. Nice. So it's fairly fresh for you, and you're pretty active on that. I see you do write some. You are. And it seems like you're definitely trying to find some really in the weed stuff. I mean, some of these are pretty low valuations that you're looking at here for you're finding here.
Yeah, Seeking Alpha would not let me write about any of those companies. So that's one of the appeals of Substack. And then also Seeking Alpha would take forever. I don't want to throw them under the bus. They're a great company that really I learned a lot from writing on there. But sometimes it did take a while for their editors to get back with me, and and that could change if you're waiting for a 10Q to drop, like your whole evaluation or assessment of a company could change in 2 days.
Yeah, of course, man. Days can mean something in this business,
Right.
especially when you have those low valuations. And some people are hunting for those things. They're going to find them maybe.
Right.
Um,
Yeah. When they pop, they pop.
yeah, yeah, yeah. Um, so we're gonna get back later. We'll share your Substack so people can see that in a second. But I see here that you are kind of aspiring to be a full-time investor. I mean, are you there yet? Kind of there. I mean, how close are you to that point right now?
So right now I'm sitting at like $66,000 in annualized income on Substack.
Mm-hmm.
So that's pretty cool. If
That's
I can
awesome.
if I can hit like a little over $100,000, I will probably quit my job. That should be something where I can still actively put money away towards investments, replace my current salary, and pay for my own insurance.
Cool.
Those
And
are
what,
my
what,
basic
what
goals.
and what are you doing now? Like, I didn't even ask you. Maybe you met
Oh,
me.
I am a quality inspector at a factory in Lapeer, Michigan.
Okay.
Um, so basically, the biggest thing that I do is I test like incoming materials to make sure that they're up to spec before we process them into another like essentially work in progress material that then gets formed into a bathtub, shower wall, or shower surround.
All right. Any stock ideas come from your work at all yet? Any?
No, I don't want to specifically say the company that I work for, but I would not invest in them. But
Okay.
it actually has come in handy. Industrial, like especially like plastics, extrusion companies. In our area, we have a lot of like fastener companies, which I've just written up a couple of those on my Substack. Like all of that stuff is kind of in this area because we are so like big three GM, Stellantis, and Ford uh, production heavy. Most it's actually odd that I work in a shop that does bathtubs and not some kind of facility that just like specifically makes things for the military and or the big three. That's like kind
Right.
of what my area is tuned to.
'Cause I was born in Dearborn, outside Detroit, Michigan.
Oh, right on.
Was
Heck yeah.
moved to suburbs of Flint when I was 7 or 8, I think it was.
Oh, you said you moved to the suburbs of Flint?
Yeah, well, actually, I was born in Dearborn, and then when I was 8, we moved to Philadelphia suburbs. Yeah,
Oh, right on, right on.
but yeah, and that's how far are you from Detroit?
I am in between an hour to an hour and a half, depending on what spot. Like I'm probably an hour and 15 minutes if you want to hit right downtown Detroit.
Okay.
But yeah,
Yeah.
I've spent a lot of time like the suburbs of Detroit. I was in a band, a couple of bands, but we would play like the Detroit area, Hamtramck area, things like that.
Yeah, I was gonna bring that up next because I play guitar
Yep,
and,
yep, yep. I saw that.
and dabbled in some band experience here and there. Probably not nearly what you guys did. I was like a hack, but and but I see that. So it was what? Tell me about the band. So how long were you doing that? And was that a kind of fun time for you?
Yeah, I've just been playing music for forever, like since I was 13. Then I've been in bands kind of like since I was, I don't know, 15, 16 years old. And my last band, Pestilent Age, were just like old school death metal band.
Okay.
We just played like mostly Michigan and Ohio shows, had some fun. And I made a little bit of money off of doing it, but which I thought was pretty cool because that's almost impossible to do in a band at all.
Right.
And if I can actually quit my job, I might go back to doing that on the side a little bit.
Yeah, that'd
But
be, that'd be awesome, man. And so
uh
I mean, what are you a singer? Do you play an instrument? What is the
I play guitar and I mix and master.
Oh, cool.
So
So electric guitar, you play like a
yep,
yeah,
yep,
okay.
yep.
Okay.
I got a Dean from Hell right behind me, and I got a Dean 7 string right to my right.
Beautiful, man. All right, awesome.
What you play blues? What?
Yeah, I play blues and jazz.
Oh, that's
I,
actually really cool.
I like an old SRV, and then I just bought a Ibanez. I mean, I hadn't bought an Ibanez in years, and I bought their newest model. I don't know what it's called, but it's pretty cool. So I want to get a little more melodic and some rock and soft rock stuff. So
All right, on. You should when you're doing jazz, you're talking like jazz fusion or like.
I like that's smooth jazz kind of stuff.
Oh heck yeah, they do. That's pretty awesome.
Like Herbie, I'll do some Herbie, like Hancock.
All right, I was just listening to what is it, Cantaloupe Island the other
Yeah,
day.
yeah. There you go. We used to play that.
Oh, that's awesome.
Wine Light was one we used to play a lot. But and then we try and play a little bit of Stevie here and there. Easy ones like Mary Had a Little Lamb. That was one of the ones we play.
Right,
But it was a fun time. Like I guess after COVID we stopped doing it because it wasn't like a career for us.
right,
It's
right.
hard
Yeah,
enough
that
to manage. It's hard enough to manage a band. It's like managing it's easier to manage, I think, a bunch of portfolio NLOPs than it is a band. So,
absolutely nobody in the band wants to answer text messages or
yeah.
whatever
And the
messages.
singers, the singers are always the hardest ones to get
Yeah, yeah,
to show up. Yeah.
yeah.
Cool, man. So, yeah, impressive returns. Yeah, 2024. Was that return for you personally, or was that for a 41.58%, or was that for your picks on Substack? Can you put some light on that?
Yeah, all of these are or were like when I sent you these a couple weeks ago, my returns at 2020 for my personal portfolio. I just have one through Charles Schwab. I had a portfolio through TD Ameritrade, and Charles Schwab bought out a lot of their smaller investing accounts. So I got merged with Charles.
Right. Okay. Well, I'm gonna actually share your Substack now.
Boom, this is my Substack homepage.
Okay. Cool.
Um yeah, pretty much I just try to put out like 2 articles a week. For the most part all of them are paid, although at the moment I'm going to try to release more free content again.
Okay.
um but yeah, it's pretty bare bones. Like this is on a federal screw, although this is a paid article. This is my
Right.
my most recent. My very next article is going to be on my portfolio and my individual stock picks.
Mhm.
I can give you guys a little shot on that. But like my individual stock picks on here, like Aliko, AXR, all these I personally own in my own portfolio.
Oh, nice bucks. I see bucks there. Okay, nice.
Yep. Yeah, that's one the a large reason for that 41% return was BUKS. AMREP did really good too that year. Dollar General is done me good so far this year. Pretty all of these Entravision Communications, Gray Media, Tenga have Tenga hasn't really taken off yet, but EVC and GTN right now are starting to finally pop on me.
He's in here. Let me see. Dollar General. A Dollar General is a bigger cap company there. So you do invest outside nano cap land too a little bit. When you
Yeah, Dollar General is a super weird pick for me, but I guess not really. Like, I actually made a lot of money off of Facebook, because I can't even. I think it was like 2 years ago. There was basically a bunch of really bad press about how much they were spending on like AI and I think the metaverse and whatnot. Even though Meta was the only company that was actually like turning a profit at that time. So when they had like a 4 PE, I bought into them and they went up like 200%. With DG, they're trading at like a 10-year low because they basically just kind of like expanded their stores too fast in the midst of COVID, where they basically like could not keep track of inventory. So
right.
I thought they had a really easy story where they could turn their company around pretty successfully. And they were just trading so low and it was so cheap that I had to buy into it. I'm actually wondering whether or not I should be selling that company right now.
I love
That's
that though, man. I mean, I love it's we as a nano cap investor, it's we play in that area and sometimes there's so many opportunities, but there is opportunity outside nano cap land too.
right. You got to be pragmatic because one, the companies that this like golden company that has like a super high net asset value compared to their share price, maybe like a super low enterprise value that just has like a lot of potential like future cash flow, like that like trifecta of like a great investment doesn't happen very often. So I mean, you got to take it when you can get it, and you got to kind of be pragmatic on some other companies when you think that there is some real upside.
Gencore is interesting here. So you own GNC. How long you had that one? Because we wrote it up. It's in our index on our Substack.
Oh, nice. I don't even know when my last write up was on that. I think it was probably honestly February or March. I My basic thesis is just that they could not file their financials. They
Right.
they basically had to switch auditors because their old auditor got bought out.
Mhm.
Um, and now once they actually file their Q1, I'm still waiting on. Once they file that and they actually can prove to investors that they can sustain those filings on time, I think that the share price should at least pop back up into that like low $20 range.
Yeah, I agree. And it's one of those funny things. Like if you don't read the headline, you just see that they're not filing their filings.
Mm-hmm.
You're gonna get this bunch of investors to sell that, right? Without understanding that, which is because a change of an auditor. I guess the auditor got acquired, right?
Right.
Was it Markham?
It was a MLSPA and they were acquired by Forvis.
Okay.
But yeah,
Yeah.
it is kind of like that special situation. That's kind of like the difference between like a potential value investment and a value trap. Like Gencore is cheap. They're a like company that actually makes super important stuff. They're making road construction material, tools, and they're also have this one event that if they can just straighten out, and it's something that should be easily doable. That stock should just at least double.
And they got a huge cash position too. I think cash per share is like $9-10.
Yeah,
Sure. And the stock's now selling at like
and
12ish maybe.
yeah, I think they had like 800K in debt too. Like,
Yeah, it's nothing. One
yeah.
thing I do wish I'd use their cash. I mean, I'm because I remember this coming back from like the 90s.
Yeah, that happens all the time in small companies too, and it
Yeah.
sucks when they just sit on these monster cash piles. Like a lot of times, I see that in companies that have super old management, or maybe it's a big family
Yep.
company. But like
Yep.
honestly, sometimes a catalyst in itself for a stock to go up, or at least for like a nice special dividend payment, is when a company has a 91-year-old CEO, because like,
Exactly.
that guy's not going to last forever. And a lot of times there's other people that are behind him kind of waiting to cash out.
I mean, there's some times where I think, okay, maybe the cash position is warranted. You know, you're waiting for your pitch. I mean, I don't know if you followed MUEL, Paul Mueller, MUEL. That's a
Oh, a long while ago. I haven't looked into those guys since like 2022.
Yeah, well, this thing just took off recently, and it was because they finally used their cash. It was everyone else was complaining about it, and then I guess 2 years ago they took that cash. It was selling at $45, I think. Yeah, it was a cash per share, and they went out and spent all that money, expanding manufacturing facilities, two tender offers at 80 and then 250. So it's been crazy. But with Gen C, I'm just wondering, um, and maybe there's a reason you don't do it. Like Mueller, yeah, I was complaining all the time, but maybe there was no reason to use the cash for that period of time. And then they used it.
Right.
With GNC, you'd think right now with the infrastructure modernization stuff going on, but why don't they just acquire a company? Maybe get another vertical. I'm just wondering if they could use that
Right.
cash, maybe buy a company to accelerate growth.
Yeah, I think they should do that, or just pay that stuff back in a special dividend, because they should be raking in cash in the future. Like, we need major infrastructure
Yeah,
improvements in this country, and I they should have a clear ramp to profit off of that.
or buy back stock.
Right. Yeah.
All right, so I didn't mean to interrupt you though. So I just
No, absolutely. Great questions. Yeah, NLOP is another big one that I think is about to take off. That did me good in 2024. But are you guys aware of that company?
I'm not no.
Oh, dang. Yeah, they were a spinoff of like this big REIT company called WPC WP Carry. Um and yeah, it's a company that they just had like, I don't know what it was, a dozen or so buildings. They had quite a bit of debt, and they just sold down these buildings. They paid off their debt. They have like 70% of their debt paid off, and they turned a profit this last quarter. And I think they're going to continue to sell off buildings, and you're probably going to start finally seeing some special dividends from NLOP.
Have they hinted at all? And did they have conference calls at all where they talked about it?
Yeah, they've talked about returning capital to higher uses when it doesn't make sense, and they've been so aggressive this past year at paying down debt. Like that stuff is almost finally done with this company.
Love it, love it. All right. Well, hey, would you mind if we put one of your stocks in our index?
Yeah, absolutely.
We'll give you credit for it. That'd be awesome. Okay.
On just whatever pick you guys want.
Yeah, yeah. Well, maybe you got a favorite, I was maybe gonna add NLOP, but if you got a favorite you want me to add, I could do that too.
Honestly, it'll probably be a dud, but like, I do think that Aliko is going to pop. I just don't know when that's going to happen, because they have like a 5-year window on developing their corkscrew growth. But I think that stock should at least double over the next like year, maybe year and a half. As
And that's the ALCO one, right?
Yes, sir.
I like it. 240 million market cap. Nice. Okay. Okay.
Yeah.
And then we'll do it. Diego, let's write that one down. Take a look at it. All right. All right. Cool. Maybe we'll take what you wrote and put a little pitch in there or something. Just summarize it, and I'll have you look at it. Lee, you can approve it, whatever. But
Oh yeah.
so you're cool. Awesome, man. So you have a unified. So I guess I saw that you have a model. Is this a model portfolio? Is that I saw that you is that what you do? You have a part of your service?
No, I don't like manage money for anybody, or like suggest necessarily what somebody should or should not invest in. So,
But you have a model portfolio people can follow, right? Did I read that right or no?
it's not like super detailed, but once every couple of months, basically I'll just do screenshots of my portfolio for anybody that wants to look at it. Even like, like right now I think I'm like -1% year to date, like as of today. But like, and anybody that I think is, suggesting stocks for people should be like upfront about what their own personal investments are. I think that, whether it's good or bad, my own personal stock performance it should be out there for everybody to see, if anybody is going to read what I have to say, and is going to like pay me for
Sure.
my write-ups. I think that that's like the absolute least that I can do.
And tracking returns is important in general. I mean, just for just transparency purposes. I mean, it's
Right, yeah.
it can be
And I do want people to actually see basically how much like a portfolio can change over the course of like a short period of time. Like last year, my stocks were, I don't know, like 6-7% like year to date until like the last like 5 months of the year of
Right.
2024, and they just UNFI took off. I think Haynes brand took off, a couple of other names, and
Love these names. Yeah.
it was over.
I know. I know from I have a Substack. We haven't marketed it much yet. It's called the Active Portfolio,
Okay.
which is about 10 to 12 stocks that we pick from the index because we had our index has like 120 stocks in it now, and we do like a weighted kind of portfolio kind of thing with it. But when you look at the chart of it, because we launched our index, Cliff Note Index, in in 2022 of February, and then I think it was like in August we launched the actual active portfolio. And when you look at the returns, you see this, the passive index is doing great. It's very consistently up, beating the indexes by a comfortable position all the time. But when you look at the active portfolio, it was really flatlining underperforming until, sometime in 24, because one of our big positions took off, a TSI.
Oh, yep.
TSI. Yeah, and it just takes a few stocks, and now it's outperforming our the passive index. But you're right. You never know when these things are going to
Right.
happen,
The,
and
the
it's funny looking at that stuff.
this carparts.com right here is actually like the bane of my portfolio right now.
Is it? Is
Actually,
it?
it's like the stock that I am kind of like waiting on and hoping and praying that it moves in a positive direction. They've just gotten beaten down really bad. They're under threat of being delisted because their stock has been under $1 for quite some time. So basically, once they do like a reverse stock split, I think that that stock should pop, just probably on news of that. But I think they're a very good buyout candidate, and it seems like uh a lot of these like Google meets that I've been having with other investors, it really seems like everybody thinks that this company will get bought out, they will get acquired. So I
Are they
am hoping for that.
are they making money, losing money, or anything? Oh, I see.
They have been losing money for a while, but like they have the number one car parts website, they have the number one eBay store in the world, and they have a bunch of inventories, and they're selling for absolutely dirt cheap. So
So it's a significant value in the brand. I'm seeing a lot of insider buying by the insiders here. Is that right? Are those all real buyings, or are they actual options?
yeah, a lot of those are buying. Some of those might be options, but yeah. Like I have not actually seen a negative piece on a write up on car parts.
Interesting. Here, look at this one here. Let me see here.
Oh, like uh, 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 almost none of my writings people agree with until they actually pop off. But like carparts.com, it seems like everybody's expecting that thing to hit like, $1.80, $2 a share.
Right. Wow. Let me see. I'll have to look at the 4 and 4 activities. Looks like there might be a combination of options and direct buys. I gotta tell. So awesome, man. So let's get into your process, your investment
Yeah,
process.
absolutely.
Um, and tell us about that. I mean, so how do you source your ideas? I mean, how do you find them?
Uh I I go through like the OTC counter screener, and I go to American stocks, common stocks, and then I think there's like a penny stock exemption option that I click just because it does narrow my pages down about in half. And then I just go through each individual company, and it's pretty easy to tell if it's like a biopharma or like a bank or something. And I generally skip over those most of the time, and I'll just click on each individual company. I'll check like their net asset value, their enterprise value, kind of like look at their earnings history a little bit, and if it's a potential candidate, it kind of goes into a bucket, and then I'll sort through those later, basically. And it's just like a super long, uh slow, boring. I want to say it's slow, but it's honestly not. If you do that for like 40-45 minutes, you're probably gonna have a couple of names that pop up that you're at least interested in.
Yeah, I
Do
mean,
you have
I mean,
any, sorry, do you have
go
any
ahead.
like filters when you're checking the companies? Like if they have too many shares outstanding, you're gonna say like, no, I don't want it, or some stuff like that.
uh Wait, repeat that last part of that question one more time.
Do you have any specific criteria that you look in these kind of stock, like shares outstanding, for example, or stuff like that?
No, not for the OTC stock screener, because honestly, that stock screener sucks. I just use that basic stock screener. I go through. It's pretty easy to tell when something's super cheap, and then generally, at least so far, it's been very easy to tell uh whether or not it's cheap for a reason pretty fast. So then after I have like 5 6 potential like write-up candidates, I'll kind of start going through and seeing like, hey, is this actually a good company, is this worth a write-up, and then I'll start doing research.
Yeah. So
So
do you have like a checklist? Like, okay, are you going to avoid? Well, I guess that's a good question. Leo, what do you avoid when you're looking at a stock? Like, what's your checklist look like when you're looking at a company to maybe potentially write about? Are there certain like things you look for that in general, or is it just a case by case basis? Or
yeah, I absolutely will not touch like anything medical, like medical devices, biopharma, any medication company. I also generally stay away from like any kind of medical marijuana company. And I
after your early lessons, right? Because you did.
apps, yeah,
Yeah.
or like, and anything like that. Emerging technology, like I'm not on the Nvidia train, even though like you probably could make a lot of money off it. It's too expensive, and I'm not going to pretend to know like what AI is going to look like in 20 years.
So you're basically you like these boring kind of industrial type of companies that I'm assuming a lot of them been around for a long time, and you're just waiting for these inflection points of either growth or catalyst to occur. It seems like that's what you're kind of
Yeah.
drawn
So
to.
when you get into these companies that have like low enterprise values or like very high net asset values, those generally, it's not that I care that much that these companies are industrial, but it does seem like when you do start looking at a company's net asset values or enterprise value, just like things like that, it's generally going to be in companies that have either been around forever, so their assets are super undervalued on their balance sheet, or that actually like make money and aren't so that they can have like very low debt, which startup companies don't have. And generally like industrial companies have it's a very asset intensive industries, so those kind of companies actually have like an asset value, where like things like tech companies and stuff like that, they don't really have anything on their balance sheet that's like very attractive. It's just this product that either people are going to like and use and profit, that company's going to profit off of, or they're going to have nothing to sell. So like even if a company has like intellectual property rights and stuff like that for certain digital products, if those products go out of favor by the market, they can basically become worthless overnight. Where a lot of times these industrial companies will have assets that can be used for other purposes, essentially.
But yeah, like you have this intangible value on these tech companies with a industrial. You have these real hard assets, like real estate. You have a bottom, and most often
Right, much harder bottom, at least. Yeah.
they're valued at less than what they're worth, right? Because they're valued when the book value when they were bought, right? Or
Right, and they have like massive amounts of like amortization, depreciation, and all that stuff happening. But yeah,
have you checked?
intangible assets are like I'm not gonna pretend to know like what the asset value is of like some intellectual property from like a book publishing company or something like that. Or like
Yeah,
I stay away from movie industry stuff because I don't know how much Disney's worth. Like
right.
they seem to be good at making money, but like Warner Brothers, companies like that, they're pumping out movies. They're not doing well. It's mostly based off of people's personal preferences, and not like some kind of hard commodity that people need to exist in the society that we live in today, which industrial companies generally provide.
Have you checked out BURCA at all, Burka?
No.
You might like that one. You should check it out when you have a chance. It's an old industrial HVAC company, and what's his name? Gabelli's all over. Gabelli took a position in this thing back around $15. It was we have a little bit of it. Um, you know, book value was like 20, like hard ass book value was $25 a share. And it looks like what's going on now is that, I mean, they're growing a little bit, but the market wasn't paying any attention to it. And I'm assuming Gabelli's making them sell. They're selling assets now. They're selling a bunch of assets. And so what I learned over time was that they bought a lot of these really small companies that are really not contributing to the company as much. It's like the 80-20% rule.
Yep.
And it appears that they're selling off these, and they got a lot more to sell off too, to realize the values. That's what happens. You hold these companies, and eventually they realize that value through an asset sale, for example.
Right.
And this is one of those situations that's maybe you like it, but it kind of goes to what you're talking about. I mean, you have these hidden assets. They're valued at book value when they were bought or purchased, maybe, and then it takes some kind of catalyst and unleash them. Maybe now it's Gabelli doing that. So
Right.
you,
Yeah.
you'll find a lot on the OTC, right? The OTC.
Right. Yeah. I usually like to be on the opposite end of companies. Like when companies acquire other businesses, there's like I think a misconception that those acquisitions always go great and that those companies like just kind of can continue to produce like the same cash flow that they did before. But I find that a lot of times it's not the case. So like a good catalyst for investment for me a lot of times is companies that have made acquisitions that go poorly, and then they do have those assets they can then sell off later. Like UNFI actually did that with they bought like Cub Foods, and
Right.
they have all these distribution centers from that they just like kept open because they had the COVID pandemic to deal with, and now that that's finally over, they were starting to sell off those distro centers, and they were just using that to pay down debt.
It's funny you just mentioned UFI because I was just looking at it a couple days ago. Looks pretty interesting actually. I mean, this thing used to be a high flyer, right?
Yeah.
At one point. I
Yeah,
mean,
I made quite a bit of cash on that in like 2024, and then I actually sold it as the stock was crashing from that hack that had happened, and then now I've actually bought back into it.
and they got. I mean, they have APS number estimates of a buck 38 and 26, and then a buck 83, 27, and 221, 28. So it's a pretty good growth coming.
Yeah, yeah,
Again,
and they're constantly getting like their margins are improving all the time. Their stock just got absolutely smashed down because of that hack,
mm-hmm.
and they still have a bunch of distribution centers to sell off. So I think that they are for the next couple of years, for the next like year or two, I would say that you could be looking at them increasing their margins, probably increasing their revenues too.
Interesting. All right, cool, cool. So, tell me about. Hold on a second here. I have my notes. Mm.
Haley, do you like usually when you research a stock, do you have like a specific industry in mind or like a specific tailwind in mind? Because I think that you've recently been posting a little bit about media companies because of the deregulation theme in the US, that kind of stuff.
Yeah, media companies are actually a another kind of odd asset because that is an intangible asset, but I do think that it's a real asset, which is the company's spectrum. And a lot of these companies are these legacy media companies that have been priced like they're basically going to go bankrupt, even though like right before this last election, a lot of these companies were pulling in ad revenue that was like at all-time highs. And a lot of these media companies too, like Brendan Carr, who's the head of the FCC, has basically done nothing but say that he's going to deregulate this industry, probably lift station caps, which could cause like large M&A events kind of like across that sector, which I think will be a catalyst for those stocks to re-rate. And Brendan Carr has also talked about how we need to constantly free up spectrum for the new age of like digital like wireless communication. So I think that he's going to have another large spectrum auction here in the future too. And once that happens, a lot of these companies will be able to shore up a lot of cash from auctioning off their spectrum. They'll be able to pay down their debt from that, and some of these companies are probably going to acquire some of these other companies. So companies with clean balance sheets. So
And let's not forget that the Trump's kids are investing in media companies now, public companies. That they
yeah.
took, I think they took over one of them. The Spanish Broadcasting was that one? I think it was SBSAA or something like that.
Oh, I didn't even know that. Yeah.
I think they took a position in that, and so yeah,
Yeah, I have a large position in Entrovision Communications myself, which
I saw that.
yeah,
Yeah.
that's Spanish legacy media. Obviously in the U.S. Having any kind of like Hispanic media during an election cycles, you're probably going to do pretty well. But yeah, that company basically had another situation where they had this digital ad service they were providing for Facebook. Facebook decided that they were going to provide that service for themselves and didn't need a third party to do that anymore. Like half of the revenues like dropped overnight, and the stock kind of bottomed out. But yeah, that's basically when I bought into that company.
So do you do a lot of buying on the pullback, like buying these companies that get hurt? Are you looking for those? Or when you find them, you just go into them. It seems like you buy some of these stocks that have kind of gotten hurt and like
Yeah,
almost contrarian.
one of the other reasons why my portfolio could be volatile is yeah, I try to catch falling knives all the time. When when I see like bad news, I'm or something is on fire, like I'm running towards that fire trying to figure out like what is happening. And that's for me in the past, it's always been a great time to buy. Like when people are the only way I'll look into a stock when people are talking about that stock is if people are generally talking negative about that stock. If
Right.
people start talking a stock up, generally it's your good time to buy is over. But when people are really really negative on a stock, even people that don't even invest, that might be a sign that like you have an opportunity. Not always, but a lot of a lot of things that really impact the share price have nothing to do with a uh, actual business model of a company, or they might just be short-term blips, like in the UNFI having that hack, that cyber security incident, things like that, maybe a missed earnings, or one contract fallout that while it's going to hurt that company, the market chooses to overreact farther than is necessary or called for.
Right. I know that I invest in smaller cap companies. For a while, we had this little model portfolio years ago in Geo. It was a buy and pull back on the big cap companies, and I found that worked well. Like I wasn't, I'm not really spending. I don't want to spend a lot of time on big caps just because there's so many I can look at in the small cap land.
Right.
So I just basically concentrated on the buy and pull back on the big cap companies, and it worked really well. So I think that's a great time to buy, because even like if you don't have an edge in large cap land, there's still panic that happens around temporary news. So that's the time I like to enter in big cap companies when they're getting hurt, and for a short term mindset kind of reason or something like that. That's what I found there. So
Right.
now
Yeah.
I got to get back to that. You remind me. I should get back to doing that on the big cap. I haven't done it in a long time.
Yeah, man, big pack. Like I said, I made a ton of money off of Facebook just because they literally had like one earnings miss that wasn't even that bad, and they were the only like social media company at the time that like was really pulling in like strong like net income and like uh big huge ad revenue, and people didn't care.
We'll call it the big beautiful big caps. That's one the portfolio BBB. Write that
Yeah.
down here. Model portfolio. So I remember this over here. I can maybe Diego can help with that. Let's see. Uh, Kind of cool. All right, and all right. So part of your interview process, are you interviewing companies, or is most of your stuff done outside the boardroom there?
Most of my stuff is done without interviewing management, although I will email management if I have a question about anything. Sometimes management reaches out. A lot of times in these smaller companies, management does not reach out. A lot of times management will just say things like, we can't talk about anything outside of our uh, you know, um,
Right.
official, financial statements and things like that. But yeah, a lot of times you'd be surprised at who's actually going to answer your emails and who won't. So I would say if you ever are curious about, a company that you're like looking into, uh, sometimes bigger companies than you think are going to be really accommodating to your emails.
Cool. And it's funny. I just got a call today from UG. I said you might like that one too, by the way. UG. It's a nice nano cap. So in our index also, United Guardian, and we're big on this concept of info arb here, information arbitrage we call it. You're trying to find these information hidden in press release, their scripts or filings that large, even small cap investors miss. And if you look at the last release, was couple weeks ago maybe, about a dividend release. You're not going to open that release up. It's just a dividend release. But when you open it up, it's 99.9% of these releases will just say, hey, here's our dividend, X date, payable date, done. On this one, they put in a nice little paragraph about the new growth opportunities coming down the pike. So now I'm very, very interested in this stock.
Yep.
It's beaten down a little bit in terms of the earnings and sales, but I think their margins are, if I'm correct me if I'm wrong, Diego, are they close to 20% EBITDA margins? So if there's any kind of
Let
growth
me
in
check.
revenue, yeah, they can. I think it might be an original article too on the cliff note there, Diego. But I just want to throw it out there. I guess I just was thinking about it. So while he's looking for that, do you source ideas from other people, Lee, or is it only really primary research you're really interested in kind of developing ideas with and conviction?
For the most part, I source my own ideas, but as my Substack and my Twitter, like continues to kind of pick up steam, I am getting like flooded all the time with ideas. And if I see an idea that I like, I'm not opposed to using it.
Great, great. And how about yourself? Tell me about your buy and your sell discipline. I mean, are you scaling into positions, or does it depend on the idea? And do you have any strict sell disciplines when you to get out? And how does that look like for you?
Yeah, I don't have like a specific like weighted portfolio. My portfolio is like worth like $36,000. It's nothing huge. Most of my positions are like $2,500 to $3,500 a position. I have 12. And I uh I buy a position most of the time to try to keep that position for at least a year. But a lot of my positions I intend to keep for like a long period of time. And I only sell my positions when the reason I have bought those positions no longer exist.
Okay, great.
So, it's kind of, it is individual on the stock on each basis. But if I bought a stock because at that time their margins got like cut in half or like severely hampered by like a certain incident, and I think that those margins should be back up to like what their historical averages are, and that occurs, that's like a reflection point where I will probably sell that stock unless other information has come up.
Okay. So I mean, and are you putting out? Are you initiating any kind of price targets at the beginning of your analysis? Like, here's generally where you think it's going to get to, and if it gets there, you sell it. Is that part of it too, or
Yep. Yeah, a lot of it. I'll have like price targets for like discounted cash flows. I'll have a price target for like what their net asset value is if I think that specific catalyst is going to be like some sort of an asset sale, and looking at like, hey, this is how much I expect them to get out of like these property sales, and once that occurs, that might be a reason for me to actually sell that stock. Like for instance, UNFI, I think, what was it? It was like 30, it was just trading at like $32. Now it's at like $21. I expect that company to at least get back to that 30, like 31, $32 mark, just from them getting over that hump of that bad cybersecurity threat. But I think on a cash flow basis, if that company can hit like 2% margins, that should be a $40 stock, and that's kind of what I'm waiting out on for that company.
right,
um
great.
you know
So in terms of we talked about being contrarian a little bit. Are you afraid to buy stocks at the highs, or are you mainly looking for maybe? Do you kind of avoid the momentum stocks? Even if
uh no, if it's cheap, it's cheap. For the most part, I do like a specific catalyst. So if that stock is shot up for a certain reason, and I think that reason is going to continue into the future, I'll generally not think too much about just buying a stock. you
right.
know
So you talked about your position sizing about right now about 2,500 to 3,500. Are you adjusting that position sizing as the stock moves up to bring it in line with that, or you just let it run until you kind of get to where you want it to get to? Are you adding to it potentially too?
yeah, I will let that stock run until like the reason I bought it is kind of like ran its course. No matter what, sometimes my stocks double. I'll get like 140% return on a UNFI.
Mm-hmm.
And I let it run that entire time.
Great. And I guess you said you own about 12 stocks, so I guess that's the some level of diversification. You're not really you don't do you're more diversified than you are concentrated, I guess, right?
Yeah. I mean, I'd like to be less concentrated, but it's been a while since I've found like that a like if I found a golden stock that really ticked off all of my boxes, I would put a large sum of money into that. But I have not found that stock yet. Every stock that I've kind of invested in, there's like one hang up that makes me stop from kind of going all in.
Cool. And how about options? Do you ever use options at all, or any kind of short selling, any of that?
No, I don't do options. I don't short. I don't mess with any of that.
Okay. Okay.
No,
Great.
the only thing that I've thought about doing, and will probably do in the future is buying bonds on bankrupt companies.
Oh, that's interesting. Okay. Yeah.
I've followed that pretty closely before, and there's been a bunch of situations where I should have done it, and I could have made a lot of money.
Okay. How about just how about bonds of distressed companies that aren't necessarily in Chapter 11 just yet? Have you thought about that at all too?
Yeah, yep. As long as I thought that those companies could make bond payments, like Coles might be a good candidate for that right now.
Mm-hmm.
I don't think last time I looked, I didn't think they had any bonds available for sale, but like those things would be at bottom. I looked into buying bonds from Revlon when they were like looking to be bought out, and they actually went they went private. They were bought out by like a single individual, but at the time they were trading for like 12 cents on the dollar.
What is here? I'm just looking at your almond form. What the heck's going on over here? PD.
Oh yeah, sorry. That's one of my holdings is Party Resources Company, PDER. Um yeah, they were trying to sell off a chunk of their property. They ended up taking that off the market because they had gotten quite a few bids, but nothing that that they it wasn't close to the price they wanted for it, essentially, because unfortunately it does seem like some property values are going down, or at least property sales are a little bit in some areas. But yeah, this company just has like a large potential for three of their main catalysts. If the housing market does improve, this company has a bunch of timber prices, timber operations that like should we have like things like tariffs, I think that they would do well from, because their wood is sourced from like Pennsylvania. This company also produces a lot of coal, so if coal price, the Trump administration is much more coal friendly, and as we need energy for things like AI and stuff like that, I think this company could do well with that. And again, this company has an almond farm which is in Portugal. Their almond trees take, I believe it was like 6 to 7 years to fully mature, and they are at that period right now, and their harvest doubled last year, and it'll probably double again this year. So out of those three catalysts, that company should hopefully do well over the next 2, 3, 4, 5 years. You are muted again, I believe.
Yeah, you're muted, Maj.
What's been your biggest win, Lee, so far? I mean, the one that the most excited, you're happiest about. You got it right.
uh Honestly, probably UNFI, Facebook. I had a very decent position in Hanes brand that really took off for me. And Maui landed pineapple as well. I did really
That
well
one.
on that.
Yeah.
Yep.
Yeah. Okay. You definitely have affinity for these like nice, boring kind of like in the wheat stocks, man. That's awesome. I remember that baby.
Yeah. 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 Maui land. I'm considering right now investing back into that company possibly. I'd have to look deeper into it, but basically their management team is very, very, very good at getting projects built on Hawaii, and that, which is pretty much impossible. Like I would never build anything on that any of those islands.
Right. Right. Okay. Cool.
Just the hurdles on that are insane. So if they can actually expand on their business, I think that stock should double,
And by
triple
the way,
even.
I like your as we close out here. Anything I missed here, Lee, that we should talk about at all that you wanted to bring up at all?
No, That was pretty in depth, actually. This is actually my my very first podcast.
Oh, well, you can't tell. You did a
So,
great job, man.
or at least I should say first financial podcast. I've done like music ones, but totally
Right.
different.
Yeah. So actually, you have a little bit of humor in your tweeting too, which I like a lot. Congress is a massive nursing home where dementia patients manage all of your money. It's pretty awesome. And you got this one here. I like you talked about um I like the way you set up your pitches. In today's market, opportunities like this don't come around often. Imagine a company with 100 million in annual sales, throwing off 10 million in free cash flow, yet trading for a market cap of just 13 million. Better yet, this company owns all of its facilities, equipment, assets that cost over 100 million. So, I mean, you definitely are funny. So, I mean, if you want to follow Lee, you should. I mean, if you're not yet, you should follow him on Twitter because he gives us nice little hints here, some really deep value stuff, and really enjoyed this talk here today with you, Lee. Let me
Right, right. Thank you.
let me actually.
Yeah, one of the hardest things to write up about stocks, honestly, is that pitch or that like tweet, that like 1-2 sentence thing that like actually gets somebody's attention.
It really is, and it's like it's actually been a good challenge too, though.
Yep.
Can you get the essence into a paragraph? Actually, what I try and do sometimes too, Lee, is like if I look at each company, and if is there one thing I really like about it, one thing, and those are the ones I go heavy into. If I can really narrow it down to like okay, maybe 3 or 4 things. Like, is there like really one crazy thing that I could say it gets me going, and I like doing that too. And we write these
Right.
articles in Substack and even Geo, and because we have to give a little meat to what we're doing. But in the end, like Lee, when you look at a stock, pretty quickly if you like it or not. You don't have, and we write this just to get the message to our subscribers and stuff. But I think it's really kind of cool when we can do that. Like even like Peter Lynch would say, like, if you can't draw in, you do this, show me in a crayon what you like.
Right. Yeah.
Or the
Yeah.
best thing.
I call it an elevator pitch. If I can't say something in like 4 sentences, if I couldn't say something to you like when I ran into you on the sidewalk in the street, then I don't know if I can necessarily word that in a way that's like palatable to a reader.
Right. Exactly. All right. Well, this has been awesome, man.
Yeah, it's been awesome. It's a great experience. Thank you guys.
Well, thank you. We've been here with Lee Roach, of the Value Road Substack. You can follow him, the Value Road, on Twitter. And really thank you for doing this, man. And would love to talk to you again in the future. Maybe meet you. If I'm in Michigan, maybe we should hang out, for a cup of coffee or some drinks or whatever.
Yeah, absolutely, man. If you're ever in like the Flint area or even Detroit area, send me a message on Twitter, like, send me an email and I'm down to meet up.
Excellent, man.
It'd
And
be
thank
great.
you, Diego, for being here and helping out. And we'll do this, to the next one. See you guys.
Absolutely. See ya.
You.